Hey, what's happening today? I'm reviewing the Redfin update, the weekly update they put out usually on Wednesday nights or Thursday mornings. And today they put it out Thursday. So we're doing this on Thursday rather than Friday. But this is a Redfin update. And I'm just bringing on Instagram folks now. Uh, StreamYard's not fun sometimes. Okay, we're live. Good. All right. So welcome to my live stream. I do this every Thursday or Friday, as long as Redfin puts out their update. And the purpose of this time is to review the Redfin, weekly housing market report, along with their updated charts and updated stats. And then I do it from a national level. But then I also do it from a local level here in Central Ohio and review the Columbus market. And if you don't know already, Redfin has this report they put out. It's great. It keeps your finger on the pulse of the market and allows you to find out what's going on a weekly basis rather than waiting for, like the MLS, or if you're a realtor like the MLS, or if you're a home buyer or home seller or investor and you want to know what's happening, is a great way to find out. And so you can go to Redfin, you can go to the website anytime you want, and you can download, down to the metro level, down to the county level, their data. You can also view their charts and all that. And I'll show you that in a second. Anyway, so welcome to my channel and welcome to the live today. I hope you get some value out of it. Consider subscribing, because I do post videos twice a week, usually, about the national and Columbus market. There's a lot happening in real estate right now, I guess, like there always is. But yeah, a lot of fluctuations, and this week is no exception. So let's get with we'll go to the data now. All right, so I'll share my screen. Let me actually put it into full view here. There we go. All right, so this Redfin update is titled Housing Market Update. More homes hit the market as spring approaches, but 7% mortgage rates keep buyers on the sideline. And as you can see, it was published today. And so I'll review a little bit of the article. I'll read some of it. I'm not going to read all of it. And then we'll dive into the details. So they say new listings posted their biggest increase in 2 months this week, but mortgage applications and pending sales declined as mortgage rates stayed stubbornly high. So you have to remember, a few weeks ago, mortgage rates were actually under 7%. Now they're over 7%. So, buyers probably came out in droves, maybe before they went back to 7%. And now that they're above 7%, Redfin saying that's keeping people on the sideline. Last week, Redfin blamed winter weather and the Super Bowl for keeping buyers on the sideline. But they do highlight the fact that more sellers are listing their houses. So it's saying more sellers are listing their homes as spring draws near. New listings rose 10% year over year during the 4 weeks ending February 18th, the biggest increase in 2 months. Sellers are hoping to take advantage of the high prices. Sales are up 6% year over year. Sale prices are up 6% year over year, the biggest increase since October of 2022. So yeah, new listings have shot up. Why? Because spring's approaching and people are wanting to list their home for sale, maybe because they have to sell it, or maybe because they want to move. And so new listings always climb in the spring. They also say, but many buyers are still sitting on the sideline. Mortgage purchase applications dropped 10% from a week earlier as the daily average mortgage rate surpassed 7% for the first time since mid-December, and pending home sales are down 7% year over year, similar to the declines we've seen since mid-January. So yeah, if you're in the mortgage business or the real estate business, in most markets, sales are down. But what I saw from the Columbus data is actually sales are up in Columbus. In the Central Ohio market, the number of sales actually rose. It'll be interesting to see if that continues. I mean, they've been so bad over the past, couple years, maybe year and a half, that like really it's hard to imagine them getting worse. as far as the number of houses that are selling, but I guess they could. Redfin agents report that the buyers who are out there mostly interested in move-in ready homes because they don't want to spend money on repairs and renovations in order to in addition to high monthly payments. Agents also recommend that sellers are open to providing some sort of financial concession to buyers to help ease the pain of 7% rates. So they're saying, hey, concessions are back. No longer are sellers just saying, here's my house, bid it up. You know, those days seem like it passed in most situations, except in my market in Central Ohio. It's definitely, there's still bidding wars going on from, from the affordable house end. And now, luxury homes, not so much, but definitely I've seen multiple offers that I've been involved with on some affordable houses, like 200 grand, maybe 250 in Columbus, outside of Columbus, 200 grand and below. And if it's below 200 grand, outside of Columbus, probably even in Columbus, and the house is decent in a good area and ready to move into, maybe past FHA, there's definitely bidding wars. This is what one of the agents said from Redfin. I tell every one of my sellers to have an open mind and put on their buyer's hat. 9 times out of 10, buyers are asking for a concession in their initial offer right now. And usually the seller needs to accept it. Okay. The most common concession buyers are asking for is a mortgage rate buy down. Really? Okay. Because rates are high, right? Requests for sellers to cover the closing costs are also common. I most often see buyers ask for concessions for more affordable homes, anything under 500 grand here in Boise, but I see some concessions on expensive homes too. That's funny. More affordable homes, anything under 500 G's. I mean, affordable homes in Ohio are, the median's 309, 310 this week. So, 250 is affordable, I guess, maybe 300 affordable, 200 affordable, not 500. It's amazing the different markets, right? All right, so let's look at some of this data according to Redfin. Daily average 30-year fixed mortgage rate, 7.11. That's about what I saw this morning from Mortgage News Daily. Year-over-year change, that's up 6.78%. Wow. Yeah, it's up a lot. Not 6.78 percentage points of a mortgage rate. It's actually up 6% or near 7% if you compare the mortgage rates from earlier at 6.92. The weekly average 30-year fixed mortgage rate, 6.77. Mortgage purchase applications, this is interesting, down 10% from a week earlier, down 13% from a year earlier. So people are actually putting in less mortgage applications than they did last year. And not only that, but they're down from last week. So mortgage applications nationally are down just from a week earlier. And I think last week, if I remember right, the update said that they were up from the week previous to that. Obviously, they've gone up, or the mortgage applications would typically go up if rates drop, I imagine. But because rates have gone up, purchase applications have gone down. Redfin Home Buyer Demand Index. This is Redfin's way of gauging the demand in the market. It's kind of like their own algorithm. I don't know if I put much stock into it, but it's interesting to see how they spin it. Up about 5% from a week earlier as of the week ending February 18th, down 15% from a year earlier. So it measures, you can see it's a home buyer demand index is a measure of requests for tours and other home buying services from Redfin agents. Google searches for homes. How many people are pecking away on their computer searching for homes on Google? Down 4% from a month earlier, down 15% from a year earlier. So less people are looking for homes, I guess, on Google. Touring activity, up 10% from the start of the year as of February 20th. At this time, it was, last year it was 14%. That number hasn't changed, I don't think, in like 3 weeks. So they're saying it's up 10% from the start of the year. How many people are out there looking at houses? I don't know. Tell me if you're watching this live and or even if you're watching the recording, are you seeing more people? If you're an agent, are you seeing more people tour houses, or is your activity picking up, or is it just still slow? All right, let's look at some of these key housing market stats. These are always interesting to look at. Median sale price, $364,000, up 5.8% year over year. That's the biggest increase since October of 2022. Wow. So, like, the median asking price is also up to $396,000, up 5.6%. So what they're pointing to here on these two stats is that the year-over-year change in the median sale price and the median asking price are both up about the same 5.8, 5.6%. And that just means that it's a difference from last year. And a lot of people are confused by this on why the median price is not crashing. Like why the median price in the United States has not like gone through the basement because of mortgage rates increasing. And the main reason that is, and people, a lot of folks on YouTube, they're like just mystified by this. It's because there's less supply and less transactions. And so there's no movement in the market at all. And because there's low supply, there's less for buyers to pick from, especially on the affordable range. So a lot of the houses that people are buying, in many cases, may be over the median or at the median. So they're not, there's not a huge amount of discounting going on in the marketplace, generally speaking. Median monthly mortgage payment, we already know that's up 7.9%. Median payment right now is $2,636 at a 6.7% rate. So now it's even more. Pending sales down 6.7% from last year. I mean, could it get worse? Looks like it is. I mean, the number of transactions has dropped substantially in the last year, no doubt. New listings, the number of houses actually entering the market, that's up a good amount, nearly 10%. The biggest increase since December of 2023. I guess that's just, a year and a month ago. Active listings, though, down still compared to last year, 1.8%. So we still only have 753,000 houses for sale. Not a lot. And then you have to remember, before the pandemic, we had like 1 million houses. So a lot of people were saying, hey, we have 1 million houses for sale. Like everything will be great. We'll be like in a balanced market where we can go out and get a deal. Not true. If you remember, before the pandemic, it was still difficult to go out and get a deal. I mean, it wasn't like foreclosures were just, you're tripping over foreclosures and, sellers are slashing prices left and right. It was a more healthy market than it is now. But I mean, even 1 million active units in the United States is just not a lot. Months of supply, 3.9 months of supply, up 0.1 point. 4 to 5 months of supply is considered balanced. So we're really almost at a balanced market now, according to Redfin. I'd like to know from you, do you think it's a balanced market? Is it balanced where you live? It's not balanced where I live. Sellers are still in control. Share of homes off the market in 2 weeks, 36.5%, up from 35%. So like this is accelerating over the past few updates. It looks like the number of homes that are actually and the share of homes on the market that are coming off market because they're going into contract is up. So more houses are going into contract quicker. Median days on market 50, that's down 2 days. Watch that median days on market, especially wherever you live. And if you're you should definitely ping your real estate agent, and if you can't find one, call me. But if you're in Ohio, if you're not in Ohio, I can still help you find an agent wherever you are. But like, if you look at the median days on market, that can significantly help your hunt for a deal, because if the median days on market is increasing where you live or where you're looking, there's a chance that there are some houses that may be sitting and you can take some stabs at. But if the median days is dropping, if that's dropping, that stat, then that will make it more difficult to find a discount. Shares of homes sold above list price, 22.9. That's up from 21%. So more homes are selling above list price. And share of homes, the price dropped 5.7%, up 1.4 points. You have to remember the share of homes with price drop at 5.7%. That's just for the last 4 weeks. I should have mentioned that. I always forget this in this live. Is that the share of that when they say the 4-week rolling average, they're just looking at the past 4 weeks for this data. This isn't like all encompassing data set for January or for last year. This is just the last 4 weeks. So in the last 4 weeks, there were the share of homes that are listed have, with a price drop are 5.7% of those homes. Average sale to list price ratio, 98.3%, up a half a point, means that sellers are getting 98.3% of what they're asking for. So not a whole lot of discounting going on. Now, that's not 100%. There are some markets that are 100%. I was just with a client last night, a client that's selling their home, and they live in a great market here in Columbus, and they're a great neighborhood. And the houses, are priced between, 550 and 700 grand, which for Columbus is and the area is definitely above the median. And they're selling, there's a bug in here. They're selling for approximately, basically 100% of list price of the original list. So it's still happening where they are selling for 100%, but not all over the place and not nationally. All right. So let's skip down here to some of these metro stats. Median sale price. San Diego, California has one of the larger price increases year over year, up 15% in prices year over year. Newark, New Jersey, 14.3. Anaheim, California, 13.5. Philadelphia, PA, 12.6. And West Palm Beach, Florida, 12.4. These cities are consistently in the top list of metros with the biggest year-over-year price increase. Now, it doesn't mean that they've increased like from the peak back in 2022, although some of them have. It really means that they're just up year over year, but they're up big. And they keep that trend continues. It seems like every week these cities are on the list. Metros with the biggest year-over-year decline, not surprised at all. It's all about Texas. Everything's bigger in Texas. Even the price declines. So if you live in Texas, it looks like prices are not, I don't know if they're crashing, but they've definitely come down a lot. They're always the metros, the biggest year-over-year decreases in pricing always seem to include Texas. Pending sales. Austin, Texas, 5% increase. San Jose, California, 1.9% increase. And then there's a bunch of cities, including Cleveland, out of Ohio, is it's down 25% in pending sales, or the sales that are actually in houses in contract. New listings up in several cities: Jacksonville, Dallas, Fort Worth, Fort Lauderdale, Austin. So you can see if there's a lot of new listings happening. And so look at some of these cities, right? Let's look at Austin. 22% increase in new listings, a lot. And they're also down in pricing 0.4%. And so if new listings are increasing, and I'm guessing their inventory is building too, active units, then that is a good sign that prices could come down. If active listings aren't increasing and they're getting snatched up and absorbed as they hit the market, generally speaking, that's a sign that prices could continue to climb or be sticky. All right, so let's visualize some of the data in these charts. The median sale price up 5.8%. You can see it right here. It's up from 2023. So the blue line here is the 2024 data. I would be surprised if it climbed and kept climbing over 2023 as we head into the summer, but it could. I mean, it could, right? I mean, I don't know when the madness ends, but like it's up, much to a lot of people's chagrin. A lot of people were like, it's going to crash. We're all doomed. Don't buy a house, whatever you do. Don't buy real estate. It's like the worst thing ever. I don't know. The prices are still up from last year. Not to say they're up everywhere. Everything's, hyper local in real estate, but it doesn't look like it's Armageddon yet, at least not by Redfin's take. All right, median asking price, 5.6% up. This is, the measure of people, how much they're asking for their home. And that's up compared to last year too. So I would guess if asking price continues to increase, then the sale price, generally speaking, would increase as long as buyers are willing to pay that price. I just don't know where that limit is sometimes. Home buyer housing payments up 7%, almost 8%, 7.9% from last year. Pending sales down 7%. Again, if you're in the mortgage business, title business, if you're a realtor, a real estate agent, a broker, maybe a home inspector, contractors seem like they're still busy though. So that's maybe more people are renovating their house instead of going out and buying a new one. That could be. Comment below. I'd love to know if that's the case. If you think that's what's going on, people are staying put. But pending sales are crushing a lot of people in the business. Agents are quitting. I think I heard a couple of days ago we lost 60,000 agents since the beginning of the year. We didn't lose them. They didn't fly off into the universe or the stratosphere. They just chose to do something else with their professional life, I guess. But having said that, I think if you're in the business, you probably agree that there are a lot of agents that are like part-time agents, right? They'll sell like a house a year. Maybe you list for their like cousin or something. Some of them may be investors that don't really play in the retail space. So maybe they hung up their license because it is expensive. It's not cheap to have your license and to stay up on it and to, keep up on the cost. Business cards are really expensive, so no, just seriously though, it is expensive. So you have to take that into account. A lot of people want to become an agent because they're like, oh, it's easy and you just collect cash in the weekends. So it doesn't really work like that. At least it doesn't for me. All right, let's skip down here more. New listings of homes. Again, this is like woo, 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 right up, right? You've got new listings of homes up 10% year over year. Significant climb, no doubt. And we do need more listings. I mean, the best thing for the housing market right now, not only Columbus, but nationally, would be for us to have a market that is normal. So we need new listings. We need more inventory. I mean, a house sitting on the market for 30 days or 60 days, it seems like an anomaly right now, but that's more of like a normal market. It's not normal to sell the house in a day with multiple offers when there's 3 more down the street to sell. And so I think this is probably a better situation long-term for us to have more listings and, bring back some affordability into the marketplace. It just doesn't, it's not good to have low inventory. Active listings though are up compared to last year, it says in this chart, but in the data, it says it's down 2%, which is kind of strange, right? Like I don't know, the graph, sometimes these graphs are goofy, but nonetheless, it is down 2% active listings. So new listings are up, pending sales are down 7%, but active listings are down as well. So it'll be interesting to see how active listings hang on, how they roll, right? We have 750,000 listings. It'll be interesting to see how that goes as we move through the spring. And if new listings keep going up, what happens? I don't know. It could end up in a situation where we end up with more inventory, which would be good. 3.9 months of supply available on the market. This is what they call months of supply or absorption rate, which essentially is how much stock inventory do we have on the market right now if at our current sales pace, if we decided or we didn't have any new listings. So if we don't add any houses to the market and use our current inventory, how long will the current inventory last? I hope that made sense. All right, let's skip down here to, there's more stuff, more stats. I always like this one though. I think it's funny. Redfin home buyer demand index down 15% year over year. So here it is down here. I don't know. It is down certainly, like in 21, it was way up here, but they started tracking this data, I think in 2021. So like they don't have a lot of historical data on here to compare it to. I don't know. I think the home buyer demand index thing is kind of stupid, but that's my opinion. All right. Let's look at, so that was national. And by the way, and again, you can come here anytime you want. Now we're going to go to another tab, and this tab is the data center from Redfin. And the link's in my description. Once I post a live, it'll be in my description, but you can go here anytime you want and find out some amazing information. Like, I mean, if you look across the top here, they've got housing market data, new construction and investor data. So you can find out what new construction is doing. You can find out investor data as far as are investors buying or not. and where they're buying. Um, yeah, so it's pretty neat. And then if you go down here to this weekly housing data, this is the 4-week rolling average information that we just reviewed nationally, but you can actually go down to the metro level. So like right now, so I can select all metro levels, and I can look at a 4-week rolling average or a 12-week rolling average. And then here I can select if I want what year I want to look at. And I like to kind of clean this up and just do 23 and 24. And then for the metro, I'll just go to Columbus. And again, you can go to about any market that has an MLS. I think that's how they do it. They separate it by MLS. Even though Redfin left the National Association of Realtors, so I'm wondering like how they have access to the MLS. I don't know. That's kind of a strange situation. All right. So let's start with median sale price. This is for Columbus. So folks in Columbus, Central Ohio, this covers like Licking County, some of Knox County, because some of the MLS in Knox County separated, and same with like the Mansfield area and stuff. But this covers mainly the surrounding counties to Franklin County, and obviously Franklin County where Columbus is. So the median sale price in Columbus, and I looked at January, according to the Columbus Board of Realtors, the January numbers came in under 300 grand. I think at 289 for the median sale price in January. So definitely down because it was up to 340 back mid last year. And you can see that now, right? June, July last year, we were at like 341. But Redfin now has it at 315. But remember, this is a 4-week rolling average. So like this is covering basically the end of January through the beginning or mid part of February through a couple days ago. So this is coming in at 315,000 or an increase of 7%. So there must have been some serious sales that happened at the very beginning of February because this has gone up, pretty steeply. I mean, it's gone up. So there's a difference there of 7% year over year. So blue is 2023, orange is 2024. Now down here, I don't usually talk about this, but this is the rate of change. In other words, the rate at which home prices are increasing or decreasing compared to last year. So this doesn't track the price necessarily. This chart tracks the trajectory. I guess you could say that. So this is 7%, right? We know that. But look, last year we were up 13% compared to 2022. And so now we're up 7% compared to 2023. How am I doing on time? 204. Okay. Pretty interesting stuff, right? Oh, let's do new listings. Why not, right? We'll look at new listings. So the tabs up here can tell you what stat you want to look at. New listings up 4.3%. So nationally, we were up 10%. Columbus, we were up 4.3%. And year over year change, I mean, up a lot, right? Because we're 4.3% up now in new listings. Last year at this time, we were down 10%. So it could be that new listings continue to climb and that inventory will build. And if it does, we should see that affect pricing. But that remains to be seen if inventory will actually build or not, at least here locally. Yeah, I guess, and nationally. Now let's look at, I like looking at active units. Active listings. So up, we actually have more inventory in Columbus now, in Central Ohio, 1.32% up. Active listings, 3,991. I can tell you that is woefully low. It doesn't matter. We're only up 1.3%. It's not going to help anything. We need a lot more inventory, folks. Just got to have it. We don't. So if demand stays, if demand keeps increasing or stays the same, and inventory doesn't, and we don't get the new listings, we're going to have a real big supply problem. But obviously, if demand softens, right, with these new mortgage rates being over 7%, if it softens, and you build in new listings at 7% increase, 10% increase year over year, for months on end, that active inventory will increase. There's no doubt about it. And prices will probably soften after that, I would imagine. All right. So active listings are up. Let's look at median days on market. About the same as last year, down 1.1%, 44 days on market. I'm curious what 2021 was like. Yeah, median days on market in Columbus was 40 days. So if you take all the houses that sell, what's the house in the middle? How long did that take to sell? 40 days last, in 2021. And now that number is 44 days. So it's slight change, not much. It's actually down from last year. Last year at this time, it was 45 days. Let's see. What else do we want to look at here? Active listings, age of inventory, price drops. Let's do price drops. So this is the percentage of sellers dropping their price. 4.3%. I think nationally it was like 5.8, if I remember right. So year over year, up 0.3%. Not really up that much at all. So there are people out there discounting their properties, but again, this is over 4 weeks. So if you look at a month, or if you look at all the properties in the market, I think historically it's like 30%. If you look at the price drops in the market at any given time nationally, I think the average comes out to like 30% of houses have had price drops. It's natural. Price drops don't mean that the market's falling apart and you can go out and grab a deal. It just means that those people maybe priced their house too high, out of the gate. That's probably what happened, right? Maybe had work that needed done, was in an area that people weren't keen on. Maybe was like sitting next to railroad tracks or something like that. That it could be why. Or sometimes it's just the person just priced the house too high. The agent did, or the seller if they're selling it themselves. Let's I got couple more here. Maybe one more and we'll be done. Let's do share of homes off the market in 2 weeks or less. That's down 1.2%. So, right now it looks like 26% of the houses in Central Ohio are off the market in 2 weeks. So anyway, that's the update. That's what's going on. Prices, they are up compared to last week. They're up compared to last year, right over $300,000 here in Central Ohio. And then nationally, they are still up. Prices are up compared to last year. A lot of people, that's what they want to understand is the pricing. The other stats are just kind of geeky stats for me. But yeah, in any case, thank you for watching this live. Comment below. And please subscribe to my channel if you want to, know more about the Central Ohio national real estate market, what's happening. I post videos twice a week, and we do a live once a week. So this is my live, signing off. Have a good day.